Hey y'all, back here again with Rafi, and today we're going to talk deeper about stock analysis. So we've invited Mr. Edbert Surya. He works as an equity research analyst at Mandiri Bank, and this Mandiri Bank is a very renowned bank here in Indonesia. So please sit back, relax, and enjoy. Hi there, Mr. Edbert Surya. My name is Rafi, and welcome to today's interview.
Hi, Rafi. How are you?
I'm good, thank you. Okay, so
Nice
should
meeting you.
yes, shall we start getting to the questions? The first
Yep,
question?
sure.
Okay.
Yep.
So, what do you do daily as an equity research analyst?
Okay, so basically in equity research analyst, we do a lot of things. I think we have quite, wide range of, responsibility in terms of our daily jobs. But what I can tell you is basically our main job is the first thing first in the morning, we do morning meeting. We start at around 7:40 a.m. in the morning from Monday to Friday. And then after that we usually do a lot of research and do a lot of you know excel modeling, I mean financial modeling, to derive our target price or what is the fair value of the company. So basically, to sum up what we do on our daily basis, basically first we do morning meeting every 7:45 a.m. in the morning, and then we do our daily routine, such as writing reports, call our clients, and also do financial modeling. I think that's the big picture of what we do on our daily basis.
Oh, let's see. So wait, what is exactly in the morning meeting? Like, is it consultation with other analysts on like their analysis, or is it something else?
All right. So basically, in capital market, I mean, every day is very dynamic. Every day there is news, whether it is bad news or good news. But I think there is, we can say in capital market there's always been a uh, you know some kind of resonance in terms of the company performance that can, I mean, the news that can impact to the company performance. So for example, these days in my coverage, if you follow the news lately, there is a new initiative from the government to create sovereign wealth fund. So basically, this is the very first sovereign wealth fund in Indonesia, and I think this is going to be a very huge impact to construction and infrastructure space. And so there is almost an update on daily basis, whether it is the management team or whether this is the funding round. I mean, the funding round is the government is trying to get overseas investment, foreign direct investment,
Hmm.
for them to bring in to Indonesia. But in overall, what I can say, in capital market there is a very dynamic. So in morning meeting, basically we update the clients. I mean, we update the sales team. What's the latest, sector update, whether this is from construction, from consumer, from any sector. So basically, we discuss what is the hottest topic in the market at the moment, and what's we gonna tell our client and what to do. Basically, buy or sell uh, for the respective stocks.
Oh, let's see. So I'm sure it has something to do with like the markets, right? So because like the events in our world, in our globalized world, it's certainly interconnected. So one event can
Yeah,
lead to another event, and that event would just domino all over the way.
yeah, exactly.
I see.
Sorry, again, your question.
Okay, no, that was the question. That was just like, yeah,
There's just a statement, right?
yeah, yeah.
Yeah. Yeah,
Okay.
you're right. Basically, our event is basically interconnected with the, not only in our regional but also for the international. For example, like Joe Biden as the president, what's his
Yes.
policy? That's pretty much impact to the Indonesia, particularly as an emerging market. Because the more inflows coming into, I think different policy will bring in the inflows or the outflows to the or to the emerging market. So I think the like the big guys like US, China, they have a very impactful policy to our capital market.
Mm, I see. So like their policies eventually reach us, right? Like it reach Indonesia because like the rippling effects of the global markets.
Yeah, of course. You can find the news quite fast right now. Basically, you can open a website like Bloomberg or Financial Times. They update it almost like every minute,
That's
right? Yeah.
I see. Okay. So, what are some of the difficulties that you often encounter as an equity research analyst?
Well, I think the difficulties that I often encounter basically how to derive the target price or basically how to justify your argument. For example, like WSKT or Waskita, that's the
Oh,
ticker or code for Waskita as one of the listed companies in the bourse. Basically, when you derive your target price, valuation is kind of art, there are a lot of perspectives. Like, for example, how do you derive the target price? Is it based on the price to earnings ratio multiples or price to books multiples, or you use sum of the parts valuation? There are a lot of valuation approach that you can use to derive your target price. But I think the most important part is how you justify your target price, and is is it like is the catalyst supports the price, I mean the stock price or not. For example, I can tell you that basically, valuation is just an art. Maybe you have read a lot of books like a valuation approaches. There are a lot of valuation approaches that we can use in the valuing the fair value of the company. That's the main idea of what equity research do. We find we justify the fair value of the company, whether there is an upside or there is a downside. So I think the most difficult part is basically how you justify your thesis or your reasonings to to derive your target price and tell it to your clients, because I think your clients will acknowledge whether this is a good report or this is just a so-so report.
mm.
Hope that's answer your question.
Yeah, that is okay. Huh. Wait, so is it just determining the target prices of random companies, or is it determining the target price of like
Oh,
specific companies that you selected through like a
okay. So basically, just to make sure, in equity research industry, basically we divide our coverage based on certain sectors. So, for example, for my coverage, I only cover infrastructures. I mean, toll roads, construction, and also transportation. While my other colleague, basically, he covered like, for example, consumer. He doesn't cover like banking or telecommunication. So we divide our main job with a different sector. Like I only cover infrastructure, space, and transportation. My friend only cover media and retail, for example. And my other colleague, basically, he only cover like banking sector. So nobody gets the same sector in the equity research industry. So from that industry or sector, we only cover like 10 to 12 companies, 8 to 12 companies. So we only follow like the big guy or the most you know impactful in the industry. Basically, we only cover the proxy of this industry or the sector. Like for example, in construction space, there are only four big players, SOE contractors. Basically, first of all is the Waskita, second one is Wika, third one is Adikarya, and the fourth one is PTPP.
Hmm, I see. So I think like don't you think that's like beneficial because like I feel that it makes it much more specialization, like so like some people specialize in analyzing this specific industry and then some others analyzing this specific industry.
Yeah, you may say that. Yeah, that's correct. Basically, we are quite specialized in our sector, but uh, not forget to mention, basically, we can also jump into another coverage if needed. So, but yeah, on the regular things, basically, we are quite be specialized.
I see. Okay. So Which analysis method do you think is better when judging what stock to buy? Growth, value, or both of them combined?
Well, I think the most important part is basically you have to understand the business model.
Oh, yes.
Basically, it's a growth or value stocks. It's depend on the cycle. I mean, it depends on your coverage. It depends on your on the I mean the cycle of your company. But I think the most important part is you have to understand the business of your company, and then you have to understand what drives the industry. And the last part is basically you have to understand what is the biggest catalyst and the biggest risk of your company. If you understand the catalyst and the risk, I mean the downside risk, I
Oh,
think you can pretty much analyze the risk and reward for your company. Is it whether the potential upside is attractive enough to limit the downside risk? So I think in the end of the day, capital market is somewhat how much money you can make. So I think limiting your downside risk while providing the upside risk is one of the most important parts in this job.
oh, I see. So, you're saying that it really depends on which specific company. Before you talked about like the cycle of the business, what exactly do you see as like the cycles of a business, and which cycles deserve which analysis method, and which cycles deserve a different?
Well, I think this is a very general question, but
Hmm.
well, and I think you can pretty much find a different answer in a different situation. But I think the most important part is I think you have to. What I mean this business cycle is basically whether the company is on the expansive uh, strategy or they are on the defensive strategy. Like for example, in construction sector or Jasa Marga, basically, one of the big, basically Jasa Marga is the biggest total player in Indonesia. In the past 5 years, they have been very aggressive in their expanding their toll roads capacity, and at the moment, basically, they are now pretty much conservative in developing new toll roads. So what I mean, business cycle, you have to understand the capitals. We call it capex, yeah, capital expenditure.
Yeah.
Um, Capital expenditure is basically the way how the company, use their excess money or basically their strategy to expand their market. So business cycle mean whether they are in the expansive mode or they are in the defensive mode, whether they want to catch the market share or they want to sacrifice their earnings or their profitability or their margin to grab more market share. So I think that's what I mean the business cycle.
Oh, I see. So like,
And I think in terms of in valuing whether the company is whether in the expansive mode, whether what kind of valuation method do you use, it's kind of technical, and I think that you might find a different answer for different occasion. But I think the most important thing, I think what I mean from the business cycle is that you have to really understand what's the company strategy in the short term and I think in the mid to long term.
I see. Ah. So would you consider startups like that of the aggressive cycle, because like they're trying to get market share, right? And what's the term? Bakar uang, I think. Where
Yeah,
like, yeah,
yeah, burn the money, right? Mm.
yeah. Where like startups just burn through their earnings simply because, wait, not earnings, burn through their
Yeah,
yeah,
yeah.
simply because they want to expand their market share and dominate the market. Like, why do you think expanding their market share is very important? Like at the start of the business.
All right. For example, if you have a market share, is basically how many customers do you have in one specific sector, right? For
Hmm.
example, if you only have one customer, they only he or she spends like only like $1 per day. If you have 10 customers, by assuming they have the same spending uh, assumption, basically if you have 10, then you have $10 per day for your revenue. If you have 100, basically your company will get 100 revenue. So I think revenue market share will also translate to your revenue. That's I think the simplest answer that I can tell you for at the moment.
Oh, I see. I see.
Yeah.
That's,
Well, of course, market share will also on the later stage. If you have a big, if you are big enough, you can also control the price. You can control your margin. You can also create a price war or something like that. But I think just to give you a brief answer, basically, your market share will translate to your revenue. I think that's the simplest method. Although, there are a lot of explanations behind what what is the competitive advantage being the market leader, something like that.
true, true. Hmm. If they just do it for the sake of revenue, wouldn't that be like a short term endeavor? Because if they were just doing it for the revenue and like the next month they lose the market share because some other company decides to be like better in business and better in features, wouldn't that just like translate to a net loss because they spent all this money building this market share? Or do you think
Well, I
that
think,
that market share is more like solid and formidable and like customers say,
yeah, of course. I mean, market share. Okay, this is a thing. Basically, you don't just burn the money, right? You
yeah,
burn the money you to get the customer. So you I understand your explanation. I understand your point of view that there will be new players coming in burning the money. But I think, look, the winners, they know and they understand how to burn the money correctly, not like a waste of money.
I see.
What I mean correctly, they have some strategies to make, or to make the customer be in the environment of that of that tech company or whatever.
Oh,
So in that sense, you are not only burning the money to get your revenue, you burn your money to get the customer acquisition. That's two different things. Customer acquisition means the customer will be in your, will use your product in the mid to long term. And there are a lot of things to define that, but I think that that's not my expertise at the moment.
oh, okay, I see.
Yeah, I can explain it to you a lot of
Oh, okay.
about it, or the plus and minus about it. But I think the main issue when you discuss about market share is how it impacts the financials, their financials, right?
Hmm.
And I think in terms of the market shares, the biggest component that will directly translate to their financials is to the revenues. That's what I wanted to tell you in the
Oh,
beginning of the
oh, I
conversation.
see, I see, I see. Okay. Ah, wow. I find it really interesting that like because this is just something new to me. Like I know this sounds like common sense, but the notion that like companies not only like burn money to get market share, but also burn money to like keep market share and like make it sustainable. I didn't
Yeah,
think of that before. Yeah. Huh,
yeah, you are correct.
I see. Okay. Okay, let's move on to like the quantitative side of things. In broad terms, how would you exactly go about quantitatively in analyzing a stock? Like, what do you think are the most important aspects of a company's financial statements that like an investor should consider when purchasing the stock?
Well, I think in the end of the day, the answer is the earnings or net profit. We have three financial statements: cash flow, income statement, and also the balance sheet. I think all of them are very important to look after. Like for example, you cannot only analyze the income statement, but you also have to analyze the balance sheet and the cash flow. This is like a one product. You know, you have to literally understand there are three financial statements, and you have to know the details. So first of all, I think the biggest what you have to know in analyzing the company is basically what drives the stock, uh, and the second one, I think, is the catalyst going forward, or what's going on in the industry. So I think if you really understand the business model, what drives the revenue, what drives the cost, what drives the profitability, I think um, you know you can also define, or you can forecast the earnings, you can forecast your earnings. And also note this is quite technical, but
Yeah.
I think in the end of the day, if you're equity investors, we have debt investors and we have equity investors. In my term, we have as an equity research, my client or is basically the equity investor. So when we talk to investors, it's not like debt investor. This is the equity investor. So for equity investors, the most important aspect is the earnings, because earnings will be distributed to the equity investors.
Hmm.
This is quite technical, but yeah, I think just to just saying that net profit or earnings is the most important aspect that you can have, that in fact equity investors have to look after.
Oh, I see. Wait, so equity investors like look at the asset side of things and like the profits, and debt investors
No,
or
no, no, no. I mean, no. I mean, asset and debt basically in the balance sheet, right?
oh,
So what I mean, equity investors, they they look into the net profit or the earnings of the company, how much money they make that can be distributed to the equity investors. Like for example, if for debt investors, they can only look at the EBITDA level or like operating level, because below that level, they understand that they can pay their interest expense. So that's what the debt investors cares about. But for the equity investors, they care about how much dividend they would distribute and whether the share price will go up or go down. So I think earnings is basically one of the most important aspects that have to be looked after.
I see. So like there's like specific positions to analyze specific parts of the financial statement. Is that what you're saying?
Well, analyzing analyzing the financial statements, there are a lot of tools or approaches that you can use. But I think the most important part is basically how, if you understand the business model, what drives the cost, what drives the revenue, I think you can totally, use the better tools to approach the earning forecast.
I see.
We can. I mean, I understand from your point of view, like a high school. I mean, in high school, I have never imagined to talk about like a profitability, market share. This is maybe something that out of your world, but I think just we can talk about how to analyze the financial statement in like 8 to 10 hours. There are lots, of tools that we can use and how to derive this and that, how advantage and disadvantage. But I think just to keep it simple, what equity investors look after, one of the most important, I think, is the earnings.
Earnings. I see.
Yeah,
So like earnings and where they come from and like what
yeah,
drives them, right?
yeah, yeah.
Ooh. Wait, I happened to like come across this method of analysis like a few days ago. Do you use like the DuPont analysis method where like you split the returns based on like the specific sources of income? Or am I incorrect about this?
Well, I think every company, they separate their income. I think, like for example, like a construction company, they have precast services. They have construction services. They have other products as well. So I think I don't really get it what you mean by quant analysis,
Oh,
but I
DuPont.
think quant analysis is one of the other, like a more like a technical valuation in my
Oh no
view.
no,
But I think,
it's DuPont analysis. DuPont like
oh,
the
DuPont,
yes DuPont
DuPont, yeah,
analysis. Yeah.
DuPont. Well, yeah, DuPont is basically how you derive on how much equity return that you can produce. This is just one of the tools, one of the many tools.
I see. What? How do you exactly like balance all these tools? If you see like there's a lot of tools and each of them may have different like perspectives on a certain company, how do you like balance these tools and come to a single conclusion?
Well, I think that's the part of the what I say earlier about the art of the valuation.
Ooh.
Basically, you have to really look into the other, competitor as well. You can only look at your company because, like for example, if your company produce like 30% gross profit margin, and what's the meaning of that? You have to look into your competitor, how much profitability they make. So you can only look at the one company, but you have to look across the sector. So the sector, I mean the same company, I mean the different company within the same sector. So I
Mm.
think that's answer the question hopefully.
I see. So like that's like a point of reference, right, to the number that you get.
Yeah, yeah.
I see. Okay.
I don't know whether you have, you know, uh, in the school. I mean, the teachers have already like teach you about these economic kind of things. But
No.
yeah, I think if you really go to, I think this is you will find it in the university or college. But profitability, the market share, and everything. I know this is kind of absurd for you at the moment, but I think yeah, well, I understand your position as a student, but well, you choose the topics for the capital market and you ask kind of, somewhat technical stuff. So hopefully you don't get confused about this.
No, I see, of course. Huh. Wait, you mentioned before about like knowing the exact drivers of a company's revenue and like the exact obstacles that's holding it back, like the one obstacle and the one driver, right? You said before.
Mm, sorry, again, yeah. Again, what's the question?
Okay. Um, you said before that you look specifically into what's the main driver of your company's revenue and what's the main obstacle that stops it from getting more revenue than it can.
Yeah. Yeah.
So, like, do you put emphasis on that when you're reading the news for the morning meetings?
All right. This is a tough question, because there are a lot of drivers and there are a lot of in capital market there is no like one plus one equal two. You
Mm,
can be like a one plus one equal one and a half or three, or there is no exact answer for that. But I think the exact example is basically if you look at the Jasa Marga, if they want to expand, how on the new toll roads, how much money they would spend into new toll roads, how is the profitability of the toll roads, whether it is good or bad toll road. You can look into the location, the potential revenue from the new toll roads. That's you have to really understand about. That's I think the easiest to be to
I see.
to
Okay,
explain.
okay, yeah, I get it, I get it. I see. Hmm. Okay, so in your quantitative analysis, how would you determine the height of your margin of safety? Like how big your margin of safety is, and thus the target price you believe the stock should be purchased at?
Okay, first of all, can you explain to me what is your definition of margin of safety?
My definition of margin of safety, so far as I've learned, is like the not exactly the discount rate, but like essentially the margin, the space between what the company is worth and what you're willing to buy it at, if I'm not wrong. Like what the company is really worth based on like what you've analyzed. Maybe it's like land bank or RNAV, and maybe
All
it's
right.
yeah.
All right. This is how basically how to determine target price, right? Basically, there are a lot of things that you have to put into the considerations before you derive the target price. But I think you can look into the valuation methods what you use,
Mm.
and I think for example like the Samarga, you have to use a discounted cash flow because they're a cash-rich business, and I think every company has a different models. Like for example, different business model will lead into a different valuation method that you have to use. But I think margin of safety, I'm not sure how to answer that, but I think target price you believe is. Oh, sorry. Oops, sorry. Can you give me a second?
It's fine. Yeah, it's fine, it's fine. Please, please.
Oops, the perk of working from home. All right, so um, the target price you believe is stock. Okay, basically target price, like I've mentioned, we use a different valuation approaches,
Mm.
but I think it really depends how target price. I can't say like what should be purchased at because I think um, this is quite technical, your questions.
Yeah, it's
Like,
fine.
for example, we have to look into their historical performance. Like, I mean, not historical performance. Like, we have to understand that future earnings gonna be and how their peers are currently traded at.
Oh.
Like, for example, like construction company like Waskita, they're trading, for example, like at 5 times, the regional peers trading at 7 times. So basically, Waskita is currently cheaper than the regional peers. So what drives the discount? Why Waskita is currently trading at discount? You really have to understand that, whether there is not enough catalyst, whether there is a margin compression, or there are a lot of things. But I think we really have to look into the benchmark of the industry at what valuation they are currently trading at.
Ah. So, so from specific pieces of information, you derive not only like that information, but also like why it's like that.
Yeah, of course, yeah.
I see. Hmm. Okay. Do you think all investors, retail and institutional alike, shall try to comprehend the company's business model when judging the value of its stock? Like explicitly, should they really spend time, a lot of time, like understanding the exact business model of the company? And like to what extent should they understand it? Like understand it to the extent where they understand the
Yeah,
sector?
I think the answer is yes. This is the most important part. You have to really understand this company business model. I think this is the basic of your, before you buy the stock, really have to understand the basic business model. So I think retail and institutional, there are two different types of investors. Basically, retail, you don't really have to understand, but I think if you want to be like investors minded, like a Warren Buffett or like an institutional minded investment, you have to really understand their specific business model, not only their business model, but their strategy going forward. So I think that's being said. I think to what extent that retail investors try to understand a company, I think it depends on how sophisticated the retail is. I mean, if you just long term, you don't have. But I think, well, put it this way. My answer is the retail investors, they have to understand the business model. But how deep the business model? I think they really have to understand, at least in the short term, what drives the company and whether there is a risk or reward for the business going forward. So I think retail here, you can assume like they only invest in the short term, not in the long term. That's what the retailer usually does.
Yeah.
So I think, first of all, this is like this is like the first thing first. Before you buy the company, you have to really understand the business model. I think that's the most important part. But I think how deep is the depth is something like it's hard to quantify.
Ooh, I see.
Wait, sorry.
No, it's fine. It's fine. It's fine. Ah.
Okay, we can continue.
Okay. So you think that like the extent to which someone like a retail investor should understand like the business model is really dependent on how long they're planning to hold the stock for.
Hmm.
Okay.
Sorry. Again. Sorry. Again.
Okay. So like, do you think that the retail investors, the extent to which they should understand like a business model, is dependent on if they are long term or short term, of like or like.
Well, sorry. I think this is the case. I mean, if everyone has their, investment horizon, right? So retail
Yeah.
tends to be like a short term,
Yeah.
and institutional tends to be long term. If you want to be long term, of course, you want to understand the company strategy and what's the company be in the long term, right? Well, at the short term, basically, retail they don't really care if there is a short-term retail investor, right? They don't really care about the long-term. So they don't usually or normally, they don't really care about company in the 5 to 10 years. But for the institutional, they really care because they invest in the long term. So for retail, what I say, basically, they don't usually, you know, care about in the long term, as they normally, I said normally, not all the retail investors, normally they only care about the short-term return. But I think from that point of view, I think that short term, before, even if it is short term, you really have to understand the business model.
Hmm. I see.
So I don't think there is a correlation between the business model and the investment horizon. This is just the this is like a appetite or your investment
Ah,
horizon from
I
the
see.
different perspective.
I see. So it's like the style, right? Like the preference of
Yep, yep.
individual. I see. All right. Hmm. Okay. Wait, what do you think comprises a business model though? Like, is it just the revenue and the sources of revenue, or is it also like the costs and where
No,
the
no, no,
cost?
no. Basically, you really have to understand, like for example, in like Jasa Marga as the one of the total player. Basically, maybe this is one of the easiest company to digest.
Hmm.
Basically, Jasa Marga, this is a toll road. So toll road service is
Yeah,
very,
total
very
services.
straightforward. You pay the toll before you get the you go to the highway, right? So
Hmm.
basically, you have to understand what drives the tariff. Basically, for the toll road tariff, what is the adjustment and when the tariff adjustment will be announced and what drives the tariff adjustment. Like for example, tariff adjustment is based on the inflation, annualized 2 years inflation base. So you have to really understand how much the inflation will be like in the next 2 years. So like for example, in Indonesia, especially during COVID, the inflation is very low, and how will it impact to the company earnings and revenue? And the tariff adjustment, whether there is a delay in tariff adjustment or not, and etc. And also, as we only being able to pay cash to get into our highway, toll roads, basically,
Huh.
you have to really understand this is a cash-rich business. That's what I mean. You have to really understand because there are a lot of business that you can have, receivables. I mean, we
Hmm.
can
Yeah.
say it, receivables like 90 days or even 120 days, right? So you really have to understand their business model, like into like a payment or how well their cash flow is, how is their balance sheet. I mean, how much debt they are now have now, and so on. So this is not only revenue and cost and
Huh.
margin.
Huh.
You really have to look into the cash flow and also the balance sheet as well.
Oh, I see. It's basically like understanding the whole financial statement along with like the qualitative aspects of the business.
Yeah, yeah, totally correct.
I see. Okay. Hmm. How how important here? How important do you consider qualitative analysis to be in analyzing the worth of a company's stock? Or like, do you think that the importance depends on which company I'm trying to analyze?
Qualitative.
Yeah, the qualitative. How important is qualitatively analyzing a stock?
Well, qualitative. I think as an equity research, first of all, you have to derive your analysis based on the quantitative
Mm,
first.
yeah,
Like
certainly. Yeah.
when I think numbers they don't lie. So I think from that point of view, then you can count, you can move forward into the qualitative analysis.
Hmm.
So I think your qualitative analysis they should have been backed up by strong quantitative analysis. So qualitative analysis is important, but I think quantitative pretty much is much more important than qualitative
Mm, I see.
because I don't know if for retail investors because we only serve the institutionals. Because I think most of the institutions they only ask about the fundamental of the company. What I mean by fundamental of the company is basically the most of it is like a quantitative parts, not the qualitative parts.
Oh, I see. I see.
Like for example, how is the impact for the sovereign wealth fund to the Waskita? You have to really understand how will it impact the Waskita financial statements and so on,
Wait,
right?
pardon me.
Like,
Software
oh,
malform?
okay, sorry, maybe that's too technical.
No,
Just
no, no.
just
I didn't understand. Like software malform.
sovereign wealth fund. Yeah, yeah, you can
Oh,
find it a lot in the news recently. Um, just for example, like this, basically, if you have a taxi company and then there is an online taxi coming in, there's a lot of new competition coming in, right? So you
Yeah.
really have to. So what's the impact basically? What's the impact? You can tell, oh yeah, the online taxi will dominate the market and with their lower tariff for the charging for customer and everything. But what then? Then what? You have to really quantify your argument, right?
Yeah, yeah, I see.
Yeah. That's my point.
Ooh. Yeah, I think I agree. Yes, because quantitative has like how do I say this? Quantitative is much more fixed in a sense, like less
Yeah.
subjective, right?
Yeah.
Yeah, because like
Yes.
it's actually quantifiable. You can actually measure it, so you can compare it and weigh it accurately with like others. Hmm,
Yeah. Yeah.
I see. Wait, what about the sovereign wealth fund that you mentioned earlier? So I'm seeing here that's like wealth fund that is state owned. They invest in real and financial assets.
Yeah, maybe you can read a lot about sovereign wealth fund later after the interview. But I think to just give a brief summary, basically, sovereign wealth fund is just a new, it's basically a fund to attract foreign direct investment to basically invest a lot of
Oh.
sectors in Indonesia from infrastructure, technology, pharmacy, hospitals, healthcare, and so on. So basically, the main idea is you bring in a foreign direct investment to pull the fund and invest in Indonesia. That's the main idea of the sovereign wealth fund.
Oh, I
We
see.
call it LPI, lembaga what lembaga something investasi ya, lembaga pengelola investasi.
Lembaga
So
pengelola investasi.
yeah.
Oh, I see. So they're like the sovereign wealth fund, right? The one who attracts like foreign investors to Indonesia.
yeah
Wow.
yeah that's the huge yeah that's
Hmm.
huge. Hey Rafi, sorry, I have another call at 6 a.m.
Oh
at
yes,
6
yes.
p.m.
Okay, okay,
I
okay.
just sent you a chat.
Yeah, yeah.
So do you want to finish or the interview? Do you have anything else, or maybe we can continue later on different days, or
Oh yeah.
what do you think?
Um,
Maybe I
I
have another 5 minutes. If you have one
okay,
more,
okay,
two more
okay.
questions,
I
we
think
can.
one more question then. All right.
Oh yeah, sure.
Okay,
Or
okay.
we can just continue on another days.
Oh,
It's
that
also
that that
fine.
will be like keberatan in English.
Okay. No. It's
Like,
okay.
oh, okay.
Sorry.
I'll see you later. It's fine. So I think one question I really want to ponder upon in this
Yeah.
interview is, do you think a company's durable competitive advantage, like moats, are important factors to consider when appraising their value? Like advantages such as a high barrier of entry, maybe customer monopoly, brand value, market share, as you said before, etc.
Sorry, I just kind of missed off your
Oh,
first sentence. Sorry.
it's fine. So what I asked was, do you think a company's durable competitive advantage, moats, are important factors to consider when appraising their value?
Hmm. I think. I think. Um, I think. Well, that's all importance. I think for in my opinion, I think you really have to understand it's you can only you cannot look at the market share, their drivers. You have to look it into like a helicopter view. In my view,
Hmm.
you really have to understand the company, not only one company, but you really have to understand it from like a helicopter view. What I mean by helicopter view is that you only know about your company, but you also really understand about the competitors in the industry, and what happening from the government regulation, what
Hmm.
happening from the regional market, and so on. So I think we can say like, oh, this stock is very good because they are the leaders in their industry. They have the very strong market share. They can monopolize the uh, price and everything. But yes, that's one thing. But I don't. But how about if the government do the intervention
Oh, yes.
and things like that, right?
Mm.
So you really have to understand it like a on the helicopter view. What's there are a lot of factor and like a regulation, like a delays in I don't know. I mean like delays in like you normalize tariff adjustment, for example, in toll road, things like that. You really have to be agile and understand how it works and how it impact the company. So that's why to answer the very first question, what we do on every morning meeting,
Yeah.
basically we discuss these kind of things. There are a lot of things that happening, like not from the only the industry. There's also from the competition that you can discuss around about the government regulation, what's the latest updated from all these stuffs. So that's what we do on our morning meeting.
Oh, I see.
Yeah.
Ah, okay, okay. All right. I think that should be all because you need to leave.
Yeah, of course.
Thank you.
If you
Thank.
have any
Oh,
further question, basically, if you have like another 4 or 5 or basically we can set up another meeting. It's
no,
okay.
no, it's fine.
I'm
It's fine.
fine.
Okay, don't worry.
Or
Okay.
maybe we can do it on the chat, like
Hmm.
WhatsApp. You have my numbers, right? So
Yeah, I do. I do.
feel free to contact me if you have any further question, or
Okay.
we
Okay.
can set up another meeting. I'm totally fine with it,
Okay.
and I think I'm very proud of the youngsters, like I say, like a youngsters that are eager to learn about capital market at a very young age. I think this is a very gold, this is a gold standard that I think your school projects, will be, and I think this is somewhat that you know I really want to pursue. So if you have, and I mean, I really want to pursue. I really want to, I really enjoy teaching about capital markets, equity research, and everything. If you have any other questions, non-related to this project, like for example, anything that you have questions non-related to this project but still related to capital market, not only equity research industry, you can always contact me. We are just one WhatsApp away, right?
Okay.
So feel free, just feel free.
Okay.
So if you have any questions or your friends or everything, they really eager want to learn about capital market or but confused or don't know where to start with, I think you can always contact me, whether it is by WhatsApp or a phone. But yeah, I really enjoy being interviewed at this moment. I think your school project is gonna be stellar, and I hope your school also understand the importance of capital market
Hmm.
existence. And this is extremely crazy, that I think extremely crazy in a good way, of course, that 10 10 grader eager to learn about capital market. So this is, I think we can say this is gold. So
Okay.
happy, and I think nice to know you, Rafi.
Okay. Thank you very much, Edbert. Okay. See ya.
Yep.
All right.
Yep. Thank
Goodbye.
you. Thank you.
Yeah.
Bye.
All right. That's all for today. Thank you for watching and goodbye.